Welcome to Crypto Corner. I'm Caroline Wood, Senior Markets Correspondent here on Schwab Network. It's time to focus on the crypto markets and get the latest insights into that space. Joining us now is Nate Peterson, Director of Derivatives Analysis at Schwab Center for Financial Research. Nate, thanks so much for joining us.
Hey, Caroline, great to be here.
So Nate, let's hit headlines first, or really the headline, the sweeping tariffs from the Trump administration that clearly caught the equity markets by surprise based on the reaction, clearly weren't priced in. But talk to us about the impact on Bitcoin.
Certainly, yeah. So the news was not anticipated by the markets in terms of the level of those rates. And, I'd say also just we haven't really gotten the best response from some of the countries. I think many are hoping that there might have been some kind of negotiations. Let's get to let's get on the phones. Let's get some discussions going. And so let's take a look at Bitcoin. Bitcoin's down, just a little bit. And it's interesting because if you look at the history of Bitcoin over time, Bitcoin is really a risk-on, risk-off asset, meaning that when investors are looking to liquidate and raise cash, this is one of the primary assets that historically they've gone to in order to do so. And I'll describe that just most recently. Go back to the unwind of the yen carry trade back in August, and Bitcoin fell from 69,000 down to 55,000 during that pullback in the stock market. And go as recently as this pullback we've had with the S&P down 10% from late February down into March. And of course, we saw roughly a 20% drawdown in the price of Bitcoin as well. So there's that correlation. I could go further back into the 2022 bear market. We saw a 77% drawdown from the peak to the trough, 69K to 16K in the price of Bitcoin. So markets or Bitcoin investors or the crypto community kind of are looking at the same data in terms of correlation when we think about Bitcoin. Is it an inflation hedge? Does it go off of, track gold? What does this correlate to? In my observation, it has been that risk on and risk off. So having noted the history of that relationship, if you look at the price action, I'm actually surprised we're not down more than we are. Furthermore, if you can throw a chart up as well on the technicals, if you look at where Bitcoin has found some support here recently, we come down to that 200-day simple moving average, that yellow line on the chart. You can see multiple times that we found some support there. We most recently, when the S&P bottomed back on March 13th, or hit that low, I should say, back on March 13th, that's where Bitcoin found some support. It was around 80,000. It was a little bit below there during that time. So with the S&P at a subsequent low here, market very much in risk-off mode, I think that this is a very interesting juncture for Bitcoin, that if we do get some additional downside in stocks, are we going to see Bitcoin break that 200-day SMA? Right now, it's like appearing to hold that line in the sand like Braveheart. We'll see what happens over the next couple of days here.
But Nate, I understand that correlation to risk off, but if you take a look at gold, for example, money's not pouring into gold right now, but it's 2% away from the highs. Bitcoin is 25% away from the highs, and some of the bulls call it liquid gold. So why the discrepancy there? And the money that's being pulled out of the market has to go somewhere. Do we think that that money will go into Bitcoin or crypto if stocks aren't looking so attractive?
Yeah, and that really is the going to be the deciding factor, because in order for that correlation to break, you would want it's got to occur. We've got to start with at least one instance where the market is selling off, stocks are selling off, risk assets are selling off, and then Bitcoin is actually going the opposite way. Like you mentioned, as we see in gold, I'd say right now, gold is the clear winner, just off of all-time highs. Gold actually saw some weakness earlier in the morning today, and then if you look at the price action, they bought right into that dip, and so that's actually some relative strength to gold. And What's going on with gold is, yes, a lot of central banks are increasing their exposure, and they've been doing so over the last several quarters. So that's certainly contributing to the price. But what also is going on is it's almost like gold and Bitcoin are an anti-fiat money trade in a sense. When there's instability, or if there's some tenuous fiscal budget deficits and disorder, let's just say, that we've seen recently in terms of all the central banks and their ability to cover all of their debt, when there's uncertainty around that, or when their ability looks like it's going to be under more scrutiny in the future, then you're seeing a lot of that money flow go into more of a safely held asset like gold. I'll also mention about Bitcoin, what is interesting is when we saw the most recent drawdown in Bitcoin from February to March, roughly 20%. I've read there was a lot of money flow that went to a lot of the tokenized real world assets like real estate that's being held on a blockchain. So money was going towards something that actually is backed by something physical. Gold, also physical. So there's still that tendency when we think about value to have something that's in this physical world or backed by it. When we talk about Bitcoin, we know that there's no cash flows, no intrinsic value. And so this is kind of the battle between the Bitcoin bulls and the gold bugs, is that will Bitcoin be able to champion gold, override gold as that store of value over what gold has traditionally been when we go into these types of risk-off markets, looking for anything that might be more defensive in nature. So we've got a movie that's going on with all of the fiscal budgets, and the tariffs are really escalating that and bringing that into the limelight. We have Bitcoin that was birthed out of the 2008 financial crisis as an alternative to fiat money. And then you've got gold, which traditionally we know it used to be backed by central banks. We came off the gold standard in the 70s, but now we're seeing gold come back into the spotlight. So this is the movie that we have going on in regards to these types of assets.
It almost seems like it should be Bitcoin's moment to shine then. But to your point earlier, at this time of filming, Bitcoin's only down about 6%, trading just above 82,000 right now. Obviously that can change. Bitcoin is volatile, but Bitcoin is known for these huge, wild swings. Is the fact that it's only down 6%, whereas some of the worst performers on the S&P 500 are down 18, 19%, actually a positive sign?
Absolutely. Absolutely. Yeah, relative strength. And that's why I say just in the next couple of days, this is going to be really important. And you also have confluence with the technicals of that 200-day SMA. Should the markets be down in the next couple of trading days and Bitcoin does break below that 200 SMA, I put support somewhere around 77 to 80K in that zone. That's really where Bitcoin took off post the election back in November. If that doesn't hold, then potentially we could see some exacerbated selling. Why? Because those that have been within the crypto world understand that there have been significant drawdowns, like I mentioned back in 2022, down 77% over about a year time frame. You want to see support hang in there at the 200-day SMA, and so that's why, Caroline, this is such a critical juncture and potentially a moment for Bitcoin to shine.
All right, we will keep our eyes on the 77 to 80K levels. Nate Peterson, thanks so much.
Thank you.
That wraps up this week's edition of Crypto Corner. Be sure to like and subscribe to Schwab Network's YouTube channel. I'm Caroline Woods. Thanks so much for tuning in.